All right, welcome to today's show. So, if you ever wanted to really understand strategy and what they're doing at a fifth grade level to where it totally makes sense, if you want to understand the different terms that are being used by Saylor and strategy because they're creating a new financial marketplace, I'm going to break that down really simply today. We're going to talk a little bit about the S&P 500 inclusion, which at this point is in the bag. And I'm going to walk you through what the future looks like for strategy. So, not financial advice, not tax advice, not legal advice on this show. Let's hear from Saylor first, and then I'm going to break it down for you exactly how to understand what strategy is doing in the most simple way to where you could explain it to a friend.
First of all, Bitcoin's been appreciating at 55% a year for the past 4 years. Bonds are depreciating 5% a year. The S&P is appreciating at about 13% a year. It's amazing to me that people would rather have a 20% ARR with 20 vol than 55 ARR with 55 vol. But yeah, if you think about it, it's pretty obvious you want the 50% return, not the 20% return. So if you're going to embrace the future, embrace digital transformation, it's going to be more volatile, it's going to be higher performance, but that's the future. So I don't get upset because I know we're winning and Bitcoin's winning. It's pretty obvious to anyone that, can chart the thing that there's a right answer and there's a wrong answer.
All right, so that was a video from Saylor from a while ago, but let's jump in today. I'm going to break down exactly what strategy is doing in the most simple terms so anybody can understand why the old money system doesn't work and why the new money system works and exactly how strategy is capitalizing on it. So I think you guys are going to like this one. It's good to see you, Bill, in the chat over there. So let's start talking about the $1 billion blueprint. Saylor says, I'm just going to issue billions and billions and billions of dollars of securities and buy billions and billions and billions of dollars of Bitcoin. Michael Saylor. So it's simple, the plan. He creates financial tools. They're called securities, these preferred stocks, Stride, Strife, Strike, all the ones that you've heard about. He uses the money from those to buy a ton of Bitcoin, and then he gives investors a chance to grow rich, slow, and steady. And this is what Saylor's doing. He says, I give you the upside, you have no downside, and I pay you a dividend while you wait to get rich. That's what's happening with these preferred stocks. So Bitcoin goes to 21 million. That's his new prophecy into the future. 21 million coins. That's all that ever exists. A $1 million price point of Bitcoin in 21 years. That is a large gain of about 20,000% gain from today. This is a new prophecy he put out recently. So based on what Saylor's talking about, everything he's doing is math. And what I share with you today is going to be super simple. I think you're really going to like it because I'm going to simplify this exact strategy of what strategy is doing. All right. So why does Saylor say it's math? Well, Bitcoin's a fixed supply. The world has way too much paper money. We're printing 6.5% more every year, and everyone will eventually run to Bitcoin. Now, the real money is in credit. So let's talk about this for a second. The long-term durable business is to issue Bitcoin-backed credit instruments. What the hell does that actually mean? Okay. So I'm going to break this down for you really simply here. And I'm going to just talk to you about this piece for a second. So Saylor's whole point on credit, he says most of what we call money today, this is not a quote from him, but most of what we call money today isn't really money at all. So it's just a promise that someone will actually pay you later. And that is what's called credit, not value. So Saylor's issuing Bitcoin-backed credit instruments. And a credit instrument is any asset that is based on trust and requires a third party. So most of money today is not real. It's not real money. It's just credit. It's like an IOU. So for example, you have cash. Now, if you hold physical cash in your hand, you possess it. So it's not a credit thing. You actually possess it. If you were to hold gold in your hands, you possess the gold. If you were to have Bitcoin that you store personally, you possess the Bitcoin. So it's not credit at that point because you actually possess the Bitcoin in a hard wallet. But when you look at bonds, this is an example of credit. You lend money and you hope to be paid back in the future. That's credit. Treasuries are the same idea. It's just from the government. It's you give the government money and it's a promise to pay you back. It's credit. Bank accounts, when you have money that's held in a bank account that you own, quote unquote, but you don't control, these are all paper promises. And if you look at most of the financial system today, it's based on just paper promises. So the problem with these credit instruments like fiat cash that sits in a bank account or these other credit instruments like bonds is they decay in value over time. And you have inflation, you have money printing, you have debt that erodes people's purchasing power. And all of these credit instruments, they can be frozen, they can be devalued, they can be defaulted upon. So when he uses the word credit, or I say credit to you, it's most money today is based on trust in the counterparty, like the party that's holding it, like the bank that's holding it. You have to trust that the bank is not going to default on your money. You have to trust that the bank is not going to go out of business. And someone else has to basically not screw it up. And this is basically what credit is. So the view on real money would be Bitcoin. Because when you look at Bitcoin, Bitcoin's called a bearer asset. And a bearer asset, bearer means you hold it, you carry it yourself. So if you hold your own gold and you physically hold the gold, it's a bearer asset. If you physically hold your own Bitcoin in your keys, it's a bearer asset. So even though strategy is issuing these credit-backed instruments, which are backed by Bitcoin, and Bitcoin is like it is like this hard asset. It is real money. They're still issuing it based on these instruments based on credit. So they're called credit instruments. Okay, but they're using a different way to do it than the typical money system, which is just basically based on credit. Lend me some money, fiat dough. I'll pay you some money back. Promise to pay. It's based on my credit, my trust. So Bitcoin-backed credit instruments, which is what strategy is doing, is very different because Bitcoin is real money. It doesn't get devalued over time. It goes up in value over time. And so Saylor's taking a piece of the old financial system and then he's merging it with the new financial system of Bitcoin. And when he says Bitcoin-backed credit instruments, people will give him money, fiat money, and then he'll take that money to buy Bitcoin. And then he gives them an IOU, like I promise to pay you 10% a year on Strife, or I promise to pay you 10% a year on Stride, or I promise to pay you 8% a year on Strike. Make sense? So he's merging kind of this old credit world, which is based on pretty much nothing, and based on fiat currency, which is based on decree, the statement that the government says it's actually worth something, which is why it's worth something. And he's merging it with Bitcoin, which is actually worth something because it's actually finite, it's actually scarce, and at the end of the day, it's sound money. So this whole new economy that's merging up, and when he talks about Bitcoin-backed credit instruments, that's exactly what he means by credit. A credit is an IOU, okay? But it's much better than the current financial system, which is purely based on credit the great majority of the time. So this is a very interesting concept to look at, right? So now, what most people don't want is, they don't want these credit-based instruments that aren't really backed by anything. So Saylor built Bitcoin-powered credit tools that pay dividends, and that's where you get these tools when you hear like Strike and Strife and Stride. To really just simplify it, it's like he takes fiat cash from people, he turns it into Bitcoin, and then his promise to pay is because we are collateralized by Bitcoin, or we hold Bitcoin, or we're backed by Bitcoin, and Bitcoin is sound money. You can count our promise and take it to the bank that we're going to pay you out. That's the game, and it's really that simple. And so he's looking to the marketplace and saying, like retirees, investors, and anyone can earn 10% safely using Bitcoin as collateral. Because if the shitty marketplace, which is the shitty financial system that we presently live in, that's being transformed into a better financial system, if they can pay out 5 or 6% on these credit instruments like bonds, which is basically just a promise to pay, which is based on the fiat money system, which is based on decree, it's worth it because I say it's worth something. The cash you hold has value because the government says it has value. That's what fucking fiat is, man. That's what it is. That's all it is. So when that's what it's based on. So all Saylor's saying is, listen, since everything you're getting today from bonds, or whether corporations, it's corporate bonds or government bonds, it's only as good as the person who's backing it. It's only as good as the company that's backing it. It's only as good as the government that's backing it. And if the government is backing it based on fiat, which is money because they say it so, and then they're saying we're going to pay you this thing back because we say it so when you buy bonds from us, that's not a very solid system at all, period, zero. So what Saylor's saying is, like, how could you not trust in the fact that we back our credit instruments like Strife and Strike and Stride by Bitcoin, and our promise to pay is now going to be 10% because Bitcoin is way more sound than the fiat that's running around through governments and countries all across the damn world. And that's the legitimate argument, and it's literally based on sound money versus printed money. It's based on truth and math versus falsities, and that's all it is. And when one understands that, it's the most simple thing to understand in the world, that Bitcoin is a smart choice, and MSTR is going to the moon over the long term, and it will be the most valuable company on the planet in the next 2 decades, period. Nobody's going to beat it. It will be the most valuable company on the planet in the next 2 decades. That's MSTR. All right. So Saylor says we're going to sell something that's less risky, more liquid, better collateralized, backed by Bitcoin. So all he's doing is being like, hey, we have a shitload of Bitcoin. All right. And if you want to give us money, we'll pay you 10% rates of return. And that's why this preferred stock thing is taking off, because he's paying out a dividend, which is basically, I'm paying out a rate of return of 10%. Okay. To put it in simple math terms that anybody can understand. So that's what's happening. Yes, TC, I am working on the weekend. And Anthony, it's good to see you, my friend. Thank you. So that's the basic game of what he's doing. And any public company can raise almost any amount of money if they're willing to dilute shareholders. This is a quote from Saylor. But Saylor figured out a way to raise money without hurting investors. So, you know, the whole idea of this game, and you see points of view from people like Chanos who want to short the stock. And maybe, you know, in the short term, somebody who's shorting the stock wins a little bit. But in the long term, you're not going to short strategy long term, because you're going to get your ass kicked. And that's the bottom line. Because over the next 4 years, 8 years, 12 years, if you take it in 4-year increments, and then you look out over the next 2 decades, this is a machine, man. And it's just getting started. So the whole game of, you know, the argument in the marketplace of like, how can they be worth a premium, meaning how can they be worth higher or more than the Bitcoin they have on their balance sheet? And it's just a very simple concept that I'm going to explain to you in about 2 to 3 minutes of exactly why they are valued more. And I'm going to explain this in a different way that I've explained it before, because it's more simple. Okay. So the most common way that we've seen it through common shares of issuing stock, where people like me go buy the stock, is like he sells his shares when the stock is strong. So the whole argument in the marketplace is like, why is strategy? They're diluting their shares. You know, this is for people who don't understand what they're doing. And this is the great majority of the population does not understand what they're doing. There's a small percentage of the people in the world who understand Bitcoin, and there's an even smaller percentage that actually understand strategy. So when in the typical way of like diluting shares in a company, it's not typically a good thing to do when you're diluting shares in a public company, because it's going to take you a long periods of time to gain that money back. But when strategy is issuing shares when the stock is strong and it's trading high, they're taking that money, buying Bitcoin. And even though it's a temporary dilution of the shares, it's extremely accretive for the shareholders like us, because his whole game is to get you more Bitcoin per share. So if you own a share of strategy, like a slice of pizza, let's say, and he's like, hey, I'm going to put more toppings on top of it, like more Bitcoin on top of it. Like, you got a slice, but I'm going to keep loading your slice of pizza with Bitcoin, more pepperoni Bitcoin, more sausage Bitcoin, more mushrooms Bitcoin, more Bitcoin. You're happy because you own a slice, and then they're adding more Bitcoin, so you're getting more Bitcoin per share. So this is the game. This is the game that's being played for the shareholders. And if you just get that concept, it's like, I draw on a piece of paper. I got a slice of strategy, a slice of pizza. And Saylor's goal for you as a shareholder, if you're a shareholder, is to give you more toppings of Bitcoin, period. That's the goal. So when you hear these new things, it's new terms, but it's a very simple concept. It has to be new terms. Why? Because it's a new economy. So you can't use the same terms as the old broken fiat system, because then you're going to use terms that are based on falsities, based on lies, based on non-truths, and you don't want to bring non-truths into the actual new system of Bitcoin and strategy and companies like that. You want to bring in new terms. So the new terms you bring in have to stand alone and be standing on truths. And so what you're looking at what Saylor's doing in this new economy is Saylor's actually basing what he's doing like entirely on, he's pricing things per se or measuring things in Bitcoin, not in fiat. He's taking the dirty fiat, the dirty, filthy fiat, right? That it loses money, it loses value every single year, and he's taking it and he's converting it into Bitcoin, which is this sound money. And then he's taking the sound money and he's saying, great, so when you buy a share of us, a piece of us, we're going to take your money, buy a slice of our pizza. We got the best damn pizza in the world. Buy our pizza, and we're going to take your money that's used to buy our pizza, our shares, and we're going to put it and convert it into Bitcoin. And then our goal is to get you, because you own a slice of our pizza, a share, we want to get you more Bitcoin per share. So as our Bitcoin holdings go up and you own a share of our pizza factory, your shares get more valuable. That's what he's doing, period. That's the game. That's it. That's what Saylor's doing. It's that simple. And anything explained in any way using any terms that are more complex than that doesn't make any sense, because the goal is, if you go buy a share, a slice of strategy pizza, right? And metaphorically, he wants to get you more Bitcoin on that slice of pizza. That's what he's doing. So the more they acquire Bitcoin, it doesn't matter which way they do it, guys. It doesn't matter. It doesn't matter whether they issue preferred stock, which is just another way to say, hey, give me some money and I'll buy Bitcoin. Or they issue common shares, which is another way to say, give me some money, I'll buy Bitcoin. Everything he's doing is just give me some money and I'll take the dirty fiat and I will convert it into Bitcoin. And you as a shareholder, when you own a slice of my pizza factory, as we get more Bitcoin, doesn't matter which way we do it, the more we get Bitcoin, the more your slice of pizza becomes valuable. So the more you hold the shares over time, the more Bitcoin per share you're going to get. And over time, this is going to be extraordinarily valuable. And that is the play. And that's what they're doing. Does this make sense to everybody? Yes? This is what it is. This is what they're doing. This is simplified. No fancy terms, and any terms that I'm going to give you, I'm going to break them down today so they are not fancy, because there's all this terminology that's being used that can be explained in very, very, very simple English, which is what the world needs to know, because nobody's going to understand strategy and nobody's going to understand Bitcoin if we start running around with these complex terms that analysts or heavy finance people understand, because you want 99% of the world to own it. And 99% of the world doesn't understand finance. So you don't explain it in a complex way. You explain it in a simple way where the world can understand it. I want to buy a slice of pizza from Strategy shares. I want them to put more toppings of Bitcoin on my freaking pizza. And that's what they're doing. That's the game, metaphorically. You get that, and you'll understand the rest that I'm about to share here in just a moment. Make sense? So there we go. So that's the plan of what he's doing. So when you look at the equity play of issuing shares, he's like, we'll sell equity. I mean, we just issue shares. Here's some paper. Buy some of my paper. Buy some of my pizza. I'll take the money you give me when you buy my pizza. I'll buy some Bitcoin. And as the price rises, I'm going to issue more pizza. You pay for my pizza, and I'm going to go out and buy more Bitcoin. Every time you do it right, and that's what this company is doing. Every time they are doing it right, investors win. And I'm not saying you win like every single day, because the price is going to fluctuate and it's all about volatility. If you watch the video that I launched earlier in this show, it was literally about volatility. And Saylor's saying, I can't understand the fact, why wouldn't somebody want to earn 55% gains with 50% volatility? Why would they rather take 20% volatility and 20% gains? It doesn't make any sense to me, because it's just math. And if you understand that volatility, as he says, is vitality, then you're in the game to play it. And over the long term, investors win. They win, they win, they win. Not financial advice, not tax advice, not legal advice, but people out there in the world need to understand in fifth grade terms why this is the smartest company on the face of the planet right now, period. There's no company smarter. It is the smartest company on the face of the planet. Money these days, and money has since the beginning of time, it runs the freaking world. And in the wrong hands, it corrupts the world. In the right hands, with the right strategies where people can win, the game has changed. And this man has changed the game. And people who own Bitcoin, which has changed the game. And the more people that pour in will change the game. And this is what's happening in the world. So, Bitcoin-powered income. we've got these basic things, and I've gone through them before, but it's worth going over them. You know, you hear these terms before, you hear them once, you're like, what is it? You hear them a second time, third time. It's worth knowing what they are because you're going to hear them all the time. And if you don't understand them, then you're like, I have misunderstood words. What the hell is he talking about? Is he striking me? I mean, even if you put into ChatGPT and you talk about strike, ChatGPT initially is going to go, did you just strike somebody in the face? Or he's going to talk about strife. If you say strife, ChatGPT is going to be like, what are you talking about? Somebody struggling in the world, because strife means to struggle. These are such new terms that even AI doesn't even know what it means unless you specifically say the term related or in context to what Saylor's talking about. So strife, we create a convertible preferred called strike and a senior preferred called strife. What does this basically mean? To break it down simply, you got strike, and strike is basically convertible. So they're paying a fixed income on it, a dividend at 8%, and then you have the option to convert into the stock. Just like you and I own common shares, like we own a slice of the pizza of MSTR. These people get a dividend, and then when the stock goes up, they can convert and own shares and own pieces of pizza like we do. Very simple, right? And then strife is just a steady dividend. It's for people who don't want to take, like they're not looking for as much as the upside. They're like, we'll take 10% compared to the shitty bond market. 10% is a gift, and they're like, we'll pay 10% out to you. You give us your money. And the strife is designed by strategy to pay out 10%. That's all it is, okay? So who's it for? People who want Bitcoin gains. They don't want wild volatility. They like predictable income. That's the fixed income stuff. I've been through that before, but just wanted to give that to you, okay? So, yeah, this is simple. We just went through this, okay? So here's what Saylor says. I'm going to digitally transform the capital markets from analog to Bitcoin-based. What does this mean in simple terms? You hear all these words, like I hate complex words. So it's really simple. Old finance, slow, boring, broken. New finance, fast, digital, running on Bitcoin. Kind of an obvious thing, you know. Gold was the thing of the last century. Bitcoin is the thing of this century. The whole damn world's digital. And people who can't see this, like, are clearly blind. But at the end of the day, people need to be right. So if they made decisions and they're sticking those decisions, they're like, I need to be right. And people need to even be right to their last breath. They're like, I will be right about this thing, even though I'm wrong about it. So you tell somebody, you give them math, you give them logical, you give them the rational point of view, you explain it over and over again. And if somebody's so indoctrinated or stuck into that old system, they will be wrong to their dying breath, but they'll be right about it. You see what I'm saying? They'll hold fiat currency, they'll hold the old system to their dying breath. They'll be like, yes, bonds and the S&P 500 are the greatest thing to hold in the world. That's the safe thing to do. And they'll be right about their wrong decisions. Now, ultimately, is it a wrong decision compared to Bitcoin? Yeah, over the long term, Bitcoin will destroy and eat up the S&P 500, period. Is it wrong to hold a portion of it? No. But to not have Bitcoin in one's portfolio is not a pro-survival thing. It's just not. So something that's not very pro-survival tends to be more wrong than right. So what's more right at the end of the day? Bitcoin, and Saylor's making the world right. And he's saying, hey, let's blend them together because Bitcoin is the right choice and it is the smart choice. We're going to blend it with the old world that's not so good, but we're going to back it by Bitcoin and everybody wins. So he's making even the wrong right, which is the right thing to do. Kind of funny, right? So there you go. So old finance, new finance, what do you want to be in? Do you want to be on the sinking Titanic and sitting there and just saying, hey, it's just great. We're loving the classical music. It's amazing. The food is fantastic. We're all going to be dead in 4 hours, but we'll just sip our tea and go down with the Titanic. Or do you want to jump off the Titanic and just kind of like maybe get in a life raft and swim to the new island? Or do you just want to just jump off the damn thing and take a helicopter and go to the new island of Bitcoin? Choice is anybody's, not financial advice, just theoretical, conceptual stuff I'm talking about here. All right, Saylor is building a new version of Wall Street. That's what he's doing, where money moves instantly instead of these slow systems. Let me ask you a question. Who do you think is going to win? Do you think the person's going to win who works 24/7, 365? Do you think the world's going to win in AI in a digital world that's speeding up at lightning speed, or the old structure of banks that are in business from 9 to 5 and they're closed 50% of the year? Versus a system that's open 24/7, 365. Who's going to win? Speed is king. Digital is king and queen. The fast eat the slow. The old system is dying, and the people who don't know that it's dying are going to be dying with it. And they're going to be slowly dying. They're going to be bleeding out slowly, drips and drips per day. So it's time for everybody to get on board, not financial advice, but everybody needs to get educated on this. They need to get educated, and kids need to get this. And this needs to be in financial school systems all across the world because people need to understand this. I'm creating an entirely new platform that's going to be gamified where kids can come in and learn, and they can play games. They can learn about Bitcoin. They can learn about strategy, and they can trade in a simulator type environment, and they can learn with fake money. Okay, keep that between us. All right. So anyway, this is the new world. Get in the new world, get in the new game. This is the message that Saylor's sending, and anybody who owns Bitcoin knows this too. All right, great. So new version of Wall Street, thank God. It's like Wall Street, come on to the new world, all right? So everything old, equity, bonds, credit now has a better version with Bitcoin, okay? If you're just joining us, I went through what credit actually is. Most of what people hold today is credit. It's a promise. It's an IOU. Credit is trust me, I will pay you back. Credit is an IOU. So most people don't actually own their money today. It sits in a bank. You don't technically own it. You don't control it. Unless you have gold in your basement, that gold is yours if it's in your basement. You are the bearer of the gold. You are the carrier of the gold, the holder of the gold, the keeper of the light. If you hold Bitcoin yourself without a third party, you are the bearer of Bitcoin. You're the carrier of the torch, the carrier of the future. But most people don't. You give money to the government, it's an IOU, it's credit. We have a credit-based system. Even credit cards are a credit-based system. That's why the world's so fucked up, man, because it's all based on credit. It's not based on truth. It's not based on solidity. Bitcoin is the first sound thing. It's like, wow, a real thing that has value. Even the diamond industry was a hoax. They were saying it was scarce. It's not scarce. Diamond industry is not scarce. They're just holding it in vaults and telling you that it's scarce. Not scarce, okay? So there you have it, right? So that's what's going on. Now we're going to get into the really important points, the very, 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 very important points of what is Bitcoin yield, what is Bitcoin gain, and what the hell is torque, man? Like, torque, are you going to stab me? Are you going to jab me? Are you going to twist me around a corner? What is torque? All right, so we're going to break this down, what torque is, because these are the terms that are floating around the space, and they're fantastic, and they're innovative, but let's break down what the hell they actually mean, okay? So here's the definitions, okay? I'm going to give you the definitions because when you hear these terms, it's important to understand. So number one, you can now judge Bitcoin or judge a Bitcoin treasury company like a pro using Bitcoin math, not dollar math. So because the economy is moving, and this is a very important point, we're moving into a new world. Anytime you have an old industry that isn't speaking truth or is messed up or has violated the true purpose of money itself, okay? It's been going on for hundreds and thousands of years where money's been diluted. It started with the Roman Empire where they took their gold coins and they started diluting them with tin and copper, and it wasn't real money anymore. So the moment money became a lie and a scam, then the true definition of money has been just totally just bastardized. And so we have a system that's been bastardized and is not based on truth. So therefore, you do have to come up with new terminology to separate and make a distinction between the old money system, which is based on mostly, to the most part, scams and lies, and the new money system, which is now based on something real, which is Bitcoin. And now you have to differentiate the two, because one of the problems on planet Earth is people think things are the same. Oh, it's the same. It's the same thing. Same thing, same thing. It's not the same thing. So in order to differentiate and it not be the same thing, there's new terminology coming out. And one who doesn't understand the new terminology will be lost in the Bitcoin world. So we have to define these new terminologies coming out because more and more companies will hold Bitcoin in their treasury. And this is the terms they're going to be using. And if one doesn't understand this, they get lost. And that's why people go, it's garbage. It's garbage. Because when somebody doesn't understand a subject, what do? Boom. It's terrible. It's bad. It's no good because they don't understand. So we got to make them understand by being simple with this. So let's look at the definitions of what these terminologies you've been hearing and hearing and hearing actually are. Bitcoin yield. What is Bitcoin yield? How much Bitcoin per share is growing, right? So with strategy, you hear Saylor talking about, I want to get my shareholders a Bitcoin yield. This is what I was just describing, literally just describing this 10 minutes ago, saying, what does he actually mean when he says Bitcoin yield? Well, yield basically is a return, if you just look up the definition of it, a return or interest, okay? But when you look at Bitcoin yield with strategy, this is where we got to break it down. So it's simple, right? When you go buy a slice of the stock, right? A slice of their pizza, and you own a slice of the pizza, he wants to get you more Bitcoin per slice of pizza. That's it. So the more Bitcoin he's adding to your slice of pizza, let's just say you own one share, you own one slice of pizza. The more Bitcoin that strategy adds to their balance sheet. So they went from 550,000 Bitcoin, 592,000 Bitcoin. Every time they add more Bitcoin, you who own a slice is getting more Bitcoin per your slice of pizza or slice of share of the company. That's an increase. That's what's called Bitcoin yield. That's all it is. So we have to understand what that is first. And I'll give you some math examples so you'll understand in just a second. But that's what yield is. Now you hear about Bitcoin gain, like because Saylor throws this around too. You're going to be hearing with this a lot of other companies. Bitcoin gain is how much Bitcoin value the company made. And we'll break this down as well. And then torque is how much the company amplifies their Bitcoin gains. All right. So I'm going to break this down in simple terms. But those are the definitions. Okay. Those are the definitions. So let's start with Bitcoin yield. Okay, when most people hear yield, they think interest, like a savings account. But Saylor's talking about something different. How much Bitcoin you get per share over time. That share gives you ownership of a slice of their Bitcoin. Okay, you own one share of MicroStrategy. I was just saying this, or strategy. And you have ownership of a slice of their Bitcoin. Okay. So now if the company keeps buying more Bitcoin, but doesn't issue a bunch of new shares, so they buy a bunch of Bitcoin, they don't issue a bunch of new shares. For example, for Strike and Strife, they're not issuing common shares for that, right? So you have Strife and you have Strike and they're buying more Bitcoin, or you have convertible bonds, right? Or I should say convertible debt. And so they're taking these instruments and then they're adding more Bitcoin to your share. Simple. So you own a share. They have all these ways to add Bitcoin to it, and they're not actually issuing more shares in the marketplace to do it with a lot of these strategies. They're just getting more Bitcoin to your slice of pizza, and that's what Bitcoin yield is. So that means your slice of the pie gets bigger, you see? It's like your slice of the pie stays the same, but because they're adding more Bitcoin of it, your slice of the pie gets more toppings of Bitcoin, so it grows and grows and grows with more Bitcoin on your slice of the pie. And that's what Bitcoin yield is. Okay? So that is the ultimate gain. All right? You didn't buy more Bitcoin. You didn't do anything extra. But you, as the shareholder, now own more Bitcoin per share than before. That is your yield. So when you hear him say Bitcoin yield, that's what he's talking about. Does this make sense to everybody? If it makes sense to you, put it in the chat box. Let me know. I want to make sure this makes sense, okay? It's good to see everybody here. We got Richard in here. We got Anthony here. We got Jay Miller in here. We got TC in here. We got a whole crew. We got RB in here. There we go. So let's say now you could do this mathematically where it gets more complex. Let's say they own 592,100 Bitcoins, and there are 10 million shares out there. That means each share is backed by about 0.0592 Bitcoin. All you do here, it's really simple. 592,000 Bitcoin divided by 10 million, right? And then it shows you 0.0592 Bitcoin. This is just an example. There are much more shares out there in the marketplace. This is just a mathematical example. Make sense? Okay. So if you don't like math on it, just think of it metaphorically. Pizza. I got a slice of MicroStrategy pizza. Add some Bitcoin to my pizza. Add some Bitcoin to my pizza. More and more pepperoni, more mushrooms, more onion, more peppers, more Bitcoin on my slice of pizza, MicroStrategy pizza. That's how you get wealthier. Okay, that's the game. That's what he's doing. That's what he's doing, all right? So if they buy more Bitcoin without increasing the number of shares, that number, right, your yield goes up, right? The benefit to you goes up. They buy more Bitcoin without increasing the number of shares. That means more Bitcoin stack and more stacks on your pizza. So the more Bitcoin they get, the more the shareholders win. All of the shareholders, every time they buy more Bitcoin, the shareholders are going to get more Bitcoin on top of their MicroStrategy pizza. Make sense? That's your yield. Now, there is a case of this that we'll talk about in just a moment, where when he issues the common shares and he issues shares, it temporarily dilutes because there's more shares in existence now. But because Bitcoin over time is going to go up, so they're diluting it by a little bit, but because the Bitcoin is accretive, meaning it goes up in value over time, the little bit of dilution compared to the massive increase in the value of Bitcoin over time makes that okay and still gives you more Bitcoin per share. Genius. It's the most genius move in the last 1,000 years of money, I think. I think in the last 1,000 years is one of the greatest inventions of Bitcoin ever, and it's brilliant. And what Strategy is doing is innovating the entire Wall Street marketplace. So there you go. So that is it. Now that we talked about Bitcoin yield, let's talk about Bitcoin gain. And this one's simple. This is not about the stock price. It's not about trading. This is raw, okay? It means what's the value of the Bitcoin we own right now minus what we paid for it. That's it. What's the value of Bitcoin we own right now minus what we paid for it? So let's do the math together. Strategy owns 592,000 Bitcoin. Bitcoin is at $107,000 today, right? They own a little bit more than 592,100. Michael, what's going on, my friend? And then Jeff, I love it. Great to have more toppings. It's so true, isn't it? So 592,000 Bitcoin and change. They own a little bit more than that, to be accurate. Bitcoin price is 107,000. It's a little bit more than that. But the actual math is if you multiply the two together, you get $63 billion. So anytime you hear that term floating around, guys, where it's like people are like, the value of strategy is they got $63 billion in holdings. All you got to do is it's simple math, okay? Because you hear these terms like 63 billion. Where's that number coming from, right? You just take the quantity of Bitcoin they hold, 592,000, times the Bitcoin price. And then you get the value of their Bitcoin, $63 billion. That's it. Simple. So when you look at this $63 billion, the value of their Bitcoin right now, what did they pay for their Bitcoin? What did they actually pay for their Bitcoin? That's what you look at next. The value, $63 billion. What did they pay for their Bitcoin? Well, they spent $41 billion to get that stack of Bitcoin. So what's the Bitcoin gain? $21.5 billion is the Bitcoin gain. Make sense? Okay. So that's the idea of the Bitcoin gain. Okay. Just understand the idea or the concept of the Bitcoin gain. That's how much they're up without selling anything. Now, there's other factors you can put into place here of like, okay, strategy, we know that has about $10 billion in debt, and there's other things to include into the equation of things, but that's the simple thing of Bitcoin gain. That's what it is, okay? So now, what is torque? Anybody heard the word torque? You hear the word torque being used out there? What is torque? Let's just define it, number one, because you hear it like, what the hell is torque, man, okay? So torque is using smart money moves like debt or stock to buy more Bitcoin than you otherwise could. And then you're multiplying your upside if Bitcoin goes up. So first, I'm going to fast forward here and go into like, what is torque, right? So when Bitcoin goes up, your returns get supercharged. So just like torque in an engine, right? So you have torque in an engine means your car goes faster with the same amount of gas. So the analogy is your car goes faster with the same amount of gas. So let's back up and look at this torque concept as it relates to Bitcoin. So torque, using smart money moves like debt or stock to buy more Bitcoin. So we just went over this. Give me your fiat money. I'm going to buy some more Bitcoin. And you're multiplying the upside if Bitcoin goes up. So they're using leverage. Let's walk through it here. If I have $1, but I'm going to control $3 worth of Bitcoin, that's torque, you see? So you've probably seen this term. It's been used a lot recently. It's just torque. It's like I got $1, but I'm amplifying, I'm multiplying the dollar that I have to control $3 worth. That's the concept. That is the concept, all right? So when Bitcoin goes up, your returns get supercharged, all right? How does strategy do it? How do they amplify their games? How do they torque it up, right? How do they get the car to go faster and they're not using like their own money to do this? Okay, how do they do it? So we know in the beginning, yes, one of the ways that they've done it is they borrow money at a low interest rate. So strategy borrows money at $500 million at 1.5%, or in cases where they borrowed at 0%, they use that money to buy Bitcoin. They don't sell shares, so they don't dilute shareholders. So you can borrow money, a way to get torque or amplify the gains for us, because what do we want as shareholders? We want one thing. We want more Bitcoin. We want more Bitcoin on our slice of pizza, on our slice of MicroStrategy shares. So when Saylor's amplifying, torquing the damn thing up with different ways to amplify the Bitcoin, we're happy about it. So he's like, one of the ways I'll do it is I'll borrow money. I'll borrow it at low interest. So he borrows at low interest, 0%, 0.5%, 1.5%. Use whatever example you want, right? Now imagine he's borrowing money and Bitcoin goes up 50%. So the dude's borrowing money and now Bitcoin goes up 50%. So they didn't use their own cash. They used cheap borrowed money. So this kind of speaks to the idea of people who will argue and say, oh, there's no strategy. You heard this before, right? There's no way possible that you should be paying 2x for the stock compared to their Bitcoin holdings. Their Bitcoin holdings $63 billion, and you're paying 1.8x what the actual holdings of their Bitcoin is. You shouldn't pay more for the stock. You shouldn't pay more for the stock. It's overpriced. It's overvalued. It's not worth it. And you hear people say this, and they don't understand what they're doing, period. Okay? Period. I would challenge anybody on this to say that, like, if you start looking conceptually of what they're doing with this torque concept, or leverage, you could call it, to amplify their Bitcoin holdings, you can easily make a case just through math, just through understanding, just through what they're doing through leverage to say the stock should be worth more than their Bitcoin holdings. It should. And it is. And that's why. Make sense? Okay? So they don't just use their own cash. So to put this in simple terms, and you've heard me say this before, but if, like, I'm an individual and I'm like, oh, I got $1, man, and I'm going to go buy some Bitcoin. I own Bitcoin. Bitcoin goes up by 50%. I take $1. I now get $1.50. But that's not what Saylor's doing. And anybody who goes like, oh, okay, Ted, like they're using leverage, it's a Ponzi scheme, they're putting money out of thin air. No. Like, leverage is a concept that's been used for hundreds and hundreds of years. You go buy a house, you're using leverage. You're not putting all your cash down at all. You're not putting all your cash down. Okay, so leverage is a concept that's been used in real estate for years, hundreds of years. It's just a concept that's used in the current marketplace. So strategy is using leverage. So where some of us may not be able to go use leverage to increase our Bitcoin stack, one of the ways that we get leverage as individuals, or I should say I do, is I go buy MSTR. Because they're using these leveraging strategies or these torquing strategies to amplify the Bitcoin holdings. So if I'm buying into the shares, I'm typically over time going to get a better return owning strategy than I will owning Bitcoin. Now, all of this to say is when strategy goes down, it crashes like a mofo. And when strategy goes up, it rockets up. So all this to say that it is volatility. It does come with risk. And anybody who's holding it short term has a tremendous amount of risk if they're planning to sell it or buy into the market or time the market, because if one's not going to hold it over the long term, there is risk associated with the asset. Okay, so you have to look at that as well. But this is why we love what they're doing. So they didn't use their own cash; they borrowed cheap money, but they now own Bitcoin that just doubled. So the Bitcoin goes up. They borrowed the money, the loan interest stays low. And anybody who's been watching Saylor and Strategy recently, you see that they're borrowing sometimes money at 0%. So the loan interest stays small or non-existent. And the gain goes straight to the balance sheet to buy more Bitcoin. And so that's the torque idea of, like, no extra fuel, just more speed. Because I'm not using fuel in this case. If I'm not paying any interest on this, where Strategy's done deals like this, where they have 0% interest, and somebody's giving me $1 billion to add to my balance sheet and buy more Bitcoin, now I just added extra fuel. No, not extra fuel. I just added more speed to my Bitcoin holdings and my company without adding extra fuel or burning. Make sense? And that's why this company's so damn genius, and that's why they're kicking ass, man. Okay? Sell shares to buy Bitcoin. This is a little trickier, and we've been through this before, but again, the number of times you hear something, the more knowledgeable you become, the more knowledge you become, the more certain you become, the more certain you become, the more in control you become, the more control you have and knowledge you have, the more powerful you can be with your financial decisions, and that's what this game is. So, selling shares in the marketplace to buy Bitcoin, okay, this is trickier, but we just went through this. They sell $1 billion worth of MSTR stock. Okay, so they sell it, and the way they do it is when the stock goes up, they will issue more shares. So you see Saylor over the last year and a half, 2 years doing this, 3 years, 4 years, the stock goes way up. He issues more shares because the stock's trading high. He takes your money, buys more Bitcoin. All right. So they added more shares, which is typically dilution. So when you see a typical company do this, you're like, oh my God, they're issuing more shares. What are they going to do? They're going to invest it in R&D. They're going to invest it into, like, equipment. They're going to invest it into a new strategy. And typical companies who do this, they're going to dilute the shares. They're going to take the money. It's going to be long periods of time until you get the money back. Well, you're seeing Strategy right now, when the market's booming, and it's booming like crazy, they're taking the stock at a high price. They're issuing more shares at that price. People are buying in, and then they're taking that cash and they're buying more Bitcoin to add more speed to their car without extra fuel. In this case, they're burning a little bit of fuel from an analogy standpoint because they're diluting the shares a little bit. But the idea is that we're going to dilute the shares a little bit, and over time, our Bitcoin stack is going to go way freaking up. So the mini piece that we dilute your shares by, we're going to add so many more toppings of Bitcoin, peppers, onions, mushrooms, Bitcoin, mushrooms, peppers, onions on top of that slice that we diluted a little bit, that you're going to be so much better off long term because it's way more accretive, meaning it goes up in value over the long term. So you're winning either freaking way, and that's the genius of what they're doing when they're issuing common shares as well. So if the Bitcoin they bought rises in value more than the dilution, then each share still gains more Bitcoin exposure. I'm going to say that again. Get this. This is an important point. If you're going to share this with a friend and educate them and school them on why this company crushes, if the Bitcoin they bought rises in value more than the dilution, right? More than the dilution, then each share still gains more Bitcoin. And that's what you want. Going back to the idea of what we were talking about before, of more Bitcoin yield, Saylor wants you to get more Bitcoin per share. He wants you to get more pepperoni Bitcoin on your slice of pizza. The pizza is going to be delicious this Christmas. It's true, TC. It's so true. It's going to be so delicious. All right. So the value of the Bitcoin added greater than the value lost from the share dilution. Okay. So it's like mathematically, and this is just an example. I'm like, yo, if like I'm gonna subtract, I'm gonna take away. You're gonna be -1 right now for a moment, but I'm gonna make you plus 10. 10 with a -1 is a 9. Would you take that? Yeah, that's what he's doing. Okay, when he's issuing shares and people are in the marketplace, I know we don't like it temporarily when he does it because sometimes the market reacts and the sentiment is like, oh my God, he's issuing more common shares. He's doing it again. The stock's going to go down. It's going to crash. We're all going to die. It's terrible. Like the response in the marketplace is not good. But the more people understand what he's doing, it's like, yo, I'm going to -1 on your shares just for a moment. But know that I'm going to plus 10 you. Make sense? So you're going to be a net gain of 9. This is just a concept. This is not real math. This is concept. Anybody who does that math goes, yeah, okay, you're going to plus 10 me. I'm going to -1 temporarily on that. That means I'm going to have the same slice of pizza that, let's say the pizza is a 10, and then you're going to shave off a little piece. You're going to dilute my pizza, but then you're going to stack me up with like 9 times the pepperoni, 9 times the damn green peppers, 9 times the mushrooms, and I'm going to be happier long term. Like, how is that not a good thing? But you get it in the marketplace, the stock goes down, and all of a sudden people go, oh my God, what's he doing? He's crazy. He's doing this. He's doing that. You love strategy because they buy Bitcoin every week. And what do you love about strategy? They're predictable in what they're going to do. They're going to buy and buy and buy and buy and buy more. That's why you love Saylor. That's why we love Saylor, because he's predictable in that. Now, while the stock's not predictable and Bitcoin's not predictable, except over 4-year periods, you love the prediction of what he's doing because he's certain, he sticks to one thing, and he continues to do it over and over again. So anything you hear about the crying in the marketplace sometimes, it's people who don't understand what he's doing. And when you understand it, you're knowledgeable about it so you don't react to it. So we got to get more people to get it and understand it so they don't react to it. Make sense? Which is the purpose of this video. There you go, okay? So that's called a positive carry trade, which basically means, yo, I'm taking stuff from over here, right? And I'm putting it over here where it's going to do better. I'm carrying it over here to where you're going to be more positive. That's all that it means. I take it from here and I put it over here. I carry it over here and it's going to be positive for you. It's going to be a positive gain. Okay. So convertible notes, we talked a little bit about like borrowing just with debt. This is the one where they raise money by selling bonds that can turn into stock later. So you hear about this. But on these deals that he's doing where it's like convertible, where he's basically saying, hey, loan me some money. You loan me some money. I'll take the money. I'm going to give you 0 interest, right? That's what he's doing with a lot of these convertible notes. Like, loan me some money and you're going to get 0 interest. And you're like, why in God's name would anybody on the face of this planet actually give him money and take 0% interest? Because what he's saying, at some point in the future when the stock is booming, you can take the money that you gave me and you can convert it into stock. So these convertible notes that he's doing are brilliant as well because they give people an opportunity to, one, get access to strategy, give strategy some money, and in the future when the stock goes up, they convert into it. And it's a win-win for them as well. So there's another way for strategy to accumulate more Bitcoin, which is what we want, all right? Get cash today, buy Bitcoin, and there you go, all right? So they get Bitcoin now and they pay almost no interest and only give up shares if the market's booming anyway. So that's the smart torque, right? So the only way they're giving up shares in this situation when somebody's converting it into shares later is when the price goes up. So somebody's going to convert their convertible note. They're going to take the billion they gave Saylor. The stock goes way up. They convert it into shares and it's all good. It's a smart way to create leverage and get more Bitcoin for strategy. All right. So we'll give a real world example of the things we just talked about and break it down. I'm happy to share it. I see. Thanks for the comment. I appreciate that. Okay. It's very nice in the chat box. All right. So real world example of torque. And this everything we were just explaining simplified in math. If you want to use it in $10 increments, you can. I'm just going to say MSTR starts with $1 billion in cash. So this would be a good point to write it down on a sheet of paper, because sometimes when you're listening to things, that's why I have stuff on the screen now. I didn't used to. You can see it visually, but if you want to sketch it out, sometimes the effect of just listening gives one a kind of a spinny effect. So if you want to sketch it out on a sheet of paper like I do right now in front of me, you just take a piece of paper or an envelope and you go, MSTR has $1 billion in cash. And let's say they borrow $1 billion more at low interest. So now they buy $2 billion worth of Bitcoin. And this is the whole idea of why they're using leverage to buy Bitcoin. They're using this torque, right? They're amplifying their Bitcoin holdings by not using their own money. And that's why one of the reasons why the stock has more value and is trading at a premium, trading at more than its Bitcoin holdings. Make sense? So they start with $1 billion cash. They're like, I'm going to borrow $1 billion more at low interest. Now they got $2 billion because they buy $2 billion worth of Bitcoin with it. Bitcoin goes up 50%. So let's just do the math on this. If I have $1 billion and it goes up by 50%, I have $1.05 billion. If I have $2 billion, remember, $1 billion of this I borrowed, so it's not my cash, and that $2 billion goes up by 50%, I just turned it into $3 billion. So it's, again, simple math. We just go through it one more time because it's so important. Let's just use it in a dollar scenario. Let's just do it. Forget the screen for a second. We're going to do it with math here. A dollar scenario. I have $1. It's just me going to buy Bitcoin, right? And it goes up 50%. I got $1.50. But if I'm Saylor, or let's say I was just me doing it and I had the capability to do this, if I have $1 and then I go and borrow $1 at zero interest or low interest, and now I have $2 and it goes up 50%, my $2 is worth now $3. So instead of $1.50, I got $3. So now what I'm doing is worth twice the amount. Everybody tracking this? Simple. It's simple. It's just a very simple idea. It's like, okay, I'm going to use other people's money. I'm going to increase my stack. Instead of using my dollar, Bitcoin goes up by 50%. I got $1.50. I use other people's money. I take my dollar, their dollar at very low interest. And $2 at 50% becomes $3. So now instead of $1.50, I got $3. That's what they're doing. And that is simple. And you can dress it up in any kind of terminology you want. You can put fancy terms around it, like the financial markets like to do. They like to use these sophisticated words that nobody understands so they can sound really smart. Well, that was cool in the old world of finance where you were trying to cover up that money was really crap and money's just based on credit and money's just based on the decree, and the fiat means decree, which means statement, and the government says that money's worth something because they say it's worth something, and that's the only reason it has money. You're trusting in the confidence of your government. That's why it has value, quote unquote. So it was cool to use all these terms, right? Back in the day, whereas like you were covering up all the actions done in the past of diluting your money and printing more money, and then you just get people lost so they can't understand a damn thing you're saying, and the world gives up. They're like, I don't understand. This financial world is too smart for me. No, the financial world is not too smart for you. Okay, we are too smart for the financial world now because I own Bitcoin. My friends own Bitcoin. They're investing in things like strategy, and so we are getting smarter than the old world that was built on many, many, many untruths and many, many, many lies and a fiat system that's not backed by crap. So now you go into the new world and we got to make it simple, and we got to get everybody on the face of the planet who's been ruined many times. Not everybody. Many people have been ruined on finance, and it's not fair, and it's not cool, and it's not cool what the system has done, but now we have to take responsibility. And the responsibility is simple. We must know and understand the terms that are being thrown out there, because you're getting new players in the space who are coming from the old world, who are still, they got the financial brains, they come from the old system, and they use this terminology that 99% of the damn population doesn't understand. So the purpose of this video is to break it down in such a simple way that we can all get it now and understand what Bitcoin is and understand what strategy is. And now we can go spread this across the world, and we can explain it at a 5th grade level so people can get it and people can win. What one doesn't understand, they can't win. So let's stop using terms that the world doesn't understand, and let's break it down and make it freaking simple. So instead of this scenario, I use the dollar because it's easier, right? And it's simple, and you get it. Okay? So what Saylor means when he says torque turns a 10% move into a 30% move, when he's saying this, what Saylor's basically saying is, like, we're looking in a world where it's like, if you look at strategy and the rate at which strategy is going up, if you look at the rate at which Bitcoin's going up, let's say you were only to assume that Bitcoin's going to go up by 30% a year over the next decade, okay? Now, we know that Bitcoin over the last 4 or 5 years, go fact check it, but it's done like 56% a year over the last 4 or 5 years on average, right? So if you look at that, but let's assume that it only goes up by 30%. So people are questioning, how can Saylor pay out? How can he pay out 10%? He's holding Bitcoin on his balance sheet and he's using these products and paying out 10%. And the world's like, no, you can't pay out 10%. Like, how are you going to do that? Like, you're going to go bankrupt. You're going to go under. You're too leveraged, which actually isn't true. They're not too leveraged. They have about $10 or $11 billion worth of debt. They've got $63 billion worth of Bitcoin. You want to tell me that's over leveraged? They're not over leveraged, okay? At all, in the slightest bit. So that's an untruth, number one. Number two, when you look at the market goes, well, like, no, there's no, how are they going to pay out 10%? This is insane. But you know what's really insane? You know what the crazy thing is? Like, how did we buy into the fact, right? I bought into this. At 22 years old, I was in the financial service business. How did I buy into the fact at 21 and 22 that I was sold on the idea that 10% over the long term or 12% was good? How did I buy that bowl of shit? How did I buy it? But I bought it. And as I started doing the math when I was 22, I remember sitting in the financial service business and I'm doing the math. And I'm like, wait, but I don't get it. I don't get it. Wait, I'm going to get 10%, but how come the fee on this thing is 1%? Doesn't make sense to me. And then I don't understand this 401k thing that you're talking about. Like, I'm 22. You want to put money in a 401k plan that I can't touch for 37 years? You want me to you want me to give my money to you? Let's do a business deal. I'm going to give my money to you. I'm 22 at the time, right? And then you're going to hold my money. You're going to lock it up. I can't touch my money. You can use it as much as you want because you're a bank and a financial institution and you can turn it over 7, 8, 9 times like you want, but I can't touch it. If I want my money, and you don't put up shit, you just take my money. If I want my money, you're going to charge me a 10% penalty if I take it out before I'm 59 and a half. And when I take it out, you're going to sell me on the bill of goods that when I take it out at 59 and a half, that I'm going to be in a lower tax bracket because you sold the world on the fact that they're going to be poor. Because if I'm in a lower tax bracket when I'm retired, it means I'm poor, dude. Right? How many of you in a lower tax bracket? That doesn't make any sense. So you're living in an economy, right, that's based on a bill of goods that we were sold that 10% is good over time. And now the world's questioning, how is Saylor going to pay out 10%? How is he going to pay out 10%? And how is he going to survive? Well, it's simple, because he's living on a sound money principle called Bitcoin, the first sound one since gold. And he's living on a sound money principle, and he's basically saying, okay, right, so let's do the math for a second. Okay, so Bitcoin went up 56% a year over the last 4 years. Let's say it only goes up 30% a year over the next 10 years. And I'm saying I'm going to pay you out 10%. I make 30% on my Bitcoin stack, which is strategy. They're making 30%, and they're paying out 10%. That's a 3x, my friends. Could they pay that out? If they're going to 3x on their money, can they afford to pay out 10%? Yeah. And then you take into the law of torque, or whatever you want to call it, or leverage, or just the fact that they're using intelligently smart ways to take fiat crap money and put it into sound money, and they're using leverage to do it, using other people's money. And then you take into account a stock that's not just going to trade at the Bitcoin value of their holdings, but it's going to trade at a premium to it, because every other company on the stock market trades at more than what they currently hold in cash or they hold in their balance sheet. Not every other, the ones that are winning, right? So if that's the case, then of course, if strategy is going to go up more than the 30%, because Bitcoin is going to go up 30%, hypothetically, in theory, do you think it's going to happen? Do you think it's going to outpace the S&P 500, which is done about 14%, when it's a far superior asset, when it's a far superior economy in the new economy? Who do you think is going to win? Bitcoin's going to win. Bitcoin's going to win, and it's going to go up 30%. So now you take into account Bitcoin win, then you take into account a company that's using leverage in these intelligent ways to get more rates of return and add more Bitcoin per share for the shareholders. And then you could be looking at, instead of 30% returns off just the Bitcoin stack, the company's going up maybe by 45%, which would be 1.5 times it's the Bitcoin return of 30%. So now you're looking at, we make 45% and we pay you out 10%. Do you think we can stay in business doing this? I think so. And that's the game, man. That's the game. That's what's happening. How did I, I'm just going to say me, I bought into it, man, at 22. 10% is going to be good. 10% is going to be good, man. You're going to be good at 12%. How am I going to be good at a 12% return when the money supply has been increasing by 6.5% every year for the last 100 years? How am I going to be good? I'm not. And then you take into account this credit world, take into account credit card debt that people have, take into account taxes that you have to pay. Take into account all the other things that are flying a tailwind, like I'm flying at 12% and you're being sold that you're going to 12% over the long run is going to be good for you. When you're flying into a headwind that's 14%, I'll fly at 12 miles per hour. Thank you, wind. Blow me back at 14 miles per hour. That is the current financial system. That's what it is. No more, man. No more. End of the game. End of the game. It's a new time. It's a new world. Bitcoin's in charge. Companies like Strategy are getting the game in charge. It is a new time. It's a new game. It's a new world. And I am in it. And I want other people to understand and get knowledgeable. And again, in final comments, as we were closing here to what I think was a good educational video on what Strategy is really doing in simple fifth grade terms, to end today, I would like to basically say this. One, yes, over the long term, this is sound. You cannot forget the volatility. One who doesn't understand the volatility and the principles, of course, is not going to get in the game, because Bitcoin has gone up many times 80% and crashed back down. It's gone up many times and crashed down 80%. So I've lived through these things since 2018 that I've been in Bitcoin. I've lived through watching Strategy since 2020 when I bought my first Strategy shares. Didn't hold on to them, wasn't smart enough then, but bought back in huge in early 2024. So watching this game, it's like, great, I'll take the volatility of the new system, because do you want to give me the slow death of the old system? I don't want to sit there and be safe in the old system and die a slow death where I'm bleeding out blood every single day and it's trickling and trickling and trickling so much that I don't really notice it that much. I feel it a little bit, and all this crap keeps coming up, man, from COVID. COVID. Come on, they stuck it to us with it. Let's be real, right? Wall Street flourished and Main Street got their asses kicked, right? While the stock market inflated and went up and people with assets got rich, the business owner on the corner couldn't go to freaking work and got his ass ripped. And how much the world fell behind during those years, how much worse it got with the printing of money. 40% increase in the money supply over 2 years. You know what that did to people's wealth? That's why your avocados are so goddamn expensive. That's why they're so expensive. It's the money. It's the money. It's what happened. And so we can sit there all day long and point our fingers, right? Because everybody's responsible to the party, including me. I went to agreement at 22 thinking 12% was a good rate of return. I went to an agreement in that business where I was selling those services stocks. I went into agreement. No more. I'm done. Done. Now we're going to slide over into the new system of Bitcoin, the new system of the new world, and I'm going to coast to the finish line. And I want to educate more people to get in the game and get in the real game, something that is finally based on a truth, because the current money system is not. That's it. It is not. It is not based on truth. It is not. Okay? So in final idea here, you have to be knowledgeable. This is just theory. This is just education. One should get their own financial advice. One should actually go out and pay attention to what's going on in the marketplace and literally do your own research and not do anything that you don't understand. So I'm not saying ever go blindly do anything. I'm just saying understand what's happening. And when you compare what's happening in the old world, which is not good, it's not good. It's just not. If you were to look underneath the hood and you were to look underneath all the financial terms and all the different things that are being done and read through the prospectuses and read the hidden fees and read all the stuff, you would be like, how did this financial world stay in business as long as it did? It's simple. Look at the debt, $37 trillion in debt. It didn't stay in business. It didn't. It passes on the burden and the tax to you. It's not in business. It's sucking off the soul of the Americans and whatever the laws are in the other countries that are doing it, and it's feeding off you to feed a broken, dead, in-debt system. Don't go in debt with them. All right, my friends, have a great rest of the day. I hope it serves you. At the end, I'm going to give one final just push on this thing as a literal disclaimer here. Not financial advice, not tax advice, not legal advice. Do your research. These are very, very volatile stocks like strategy. Bitcoin is a volatile asset at the end of the day. But if you understand the principles, look into the future 4, 5, 10 years out, and you'll see what I'm talking about. Hope it serves you. Have an amazing day. Crush it, and I'll see you soon.